Hi everyone. Hi, good. I just want to make sure that we're actually live and I will make sure you're hearing me. Good afternoon, good afternoon, good afternoon. It's just past 12 noon Eastern time, my time. And let me make sure, troubleshoot here. Fingers crossed you can hear me this time. Yesterday I tried to do a live, but it was a little bit of a disaster. Let's see here. Awesome. Perfect. Thank you for being a part of our group. And today I actually have something important to discuss with us. So, we want to talk about why it is a good time to invest in real estate. Um, I get asked this question a lot of times as to what's going on in the market. Stocks are nothing to write home about right now. How are people's 401k doing? The return on investment is not great right now, and people are wondering, don't even talk about crypto, right? Don't talk about anything investing right now. People want to hold on to their money and see how it goes with inflation and recession and things like that. What do you guys think? So today I want to quickly discuss why it is a good time to get into real estate investing. And before I do that, I'm going to go ahead and introduce myself just in case you don't know me. Okay. So, my name is Yinka Olumorin. I am a real estate investor, currently a registered pharmacist. I had a degree at UConn, University of Connecticut. And after that, I worked at Walgreens Pharmacy for 5 years. And around the fifth year was when I saw that I would have a better return on my time going fully into real estate investing. So I did go fully into real estate investing, and it's been awesome. Over the years, we've done over 40 real estate deals. And I also currently help upcoming investors get started. Okay, I'm married with two boys, two lovely boys, and my husband Dari and I are helping to build this community of real estate investors together. And it's so awesome to have him because he is big on the project side of things and construction. So when people have questions about projects, about real estate construction, he's always there to help and answer questions. And he's actually been on a couple of student sites as well. So it's a blessing to have him. It's a blessing to have a balanced community where we just don't have the knowledge information, but we also have the real deal. People who are doing great things in real estate investing. So thanks again for being here. Like I was saying, I did try to go live yesterday. It didn't work out. I'm happy to be live today. So if you're here with me, please introduce yourself in the chat. I'd like to get to know you. I'd like to get to know your name and what you do and what your goals are. And feel free at any point in time to send me a message as well. Okay. So our talk today, like I was saying, is why this is a good time to invest in real estate. And if we were to really talk about that, we want to know what real estate investing means. What does it mean to invest in real estate? It sounds like a big name, but really you're just buying and or selling real estate, okay, to make some profits, right? So you're making either short-term income or long-term income on real estate activity. And it can be a short-term activity, it can be a long-term activity, but what you're doing is really buying and or selling real estate to make income. And it could be short-term. So short-term would be something like fix and flip. If you've heard about fix and flip, so if you put like you bought a property for $50,000 and you put in another $50,000 in repairs and you sold it for 200,000. Okay, you can kind of pretty much figure out what your income might look like at that point. So that's like a massive income and you're making it one time. Usually short term is talking about anything less than 12 months, and it's usually around 6 months turnaround or less. We've seen 2 months, we've seen a month, 2 months, 3 months. So that's short term real estate investing. An example of a long-term real estate investing would be if you took that $50,000 property and you put in that $50,000 worth of repairs, and you went ahead and put in tenants into that property. So every single month you're making income after paying the mortgage on that property. Or let's say you didn't even have any mortgage on it. You're making income on a monthly basis from that property. Okay, so every single month you're making income. It's more of a long-term situation. You're holding that property forever. So that's really, it's pretty straightforward. When you're thinking real estate investing, that's what I want you to think about. It could be short term and it could be long term. So like we're saying, the big deal about long term really is the monthly cash flow, the amount you're getting every single month, where you're going to a place where you don't necessarily need an additional job in quotes. I mean, it would be up to you to figure out whether you really want to do something extra with your time or not at that point where you have additional monthly cash flow coming in on its own in a passive manner. Okay, so that's a great thing about long term real estate investing. And then the other thing to think about is mortgage pay down. So you are not the person paying that mortgage down. Your tenants are paying down your mortgage. So at some point in time, that house will be what? Will be free and clear because now you don't owe anyone on that property, right? Then the other thing you want to know is the appreciation. When it comes to real estate investing, long-term real estate investing, you're thinking of that property as being worth more in the future than right now. So, for instance, since the pandemic happened, I mean, even without the pandemic, we've had appreciation in place. Okay, so properties rise in value over time. But then with the pandemic, there was this really big rise in the value of properties. Okay, so let's say, for instance, very marginally speaking, a property that was worth $100,000 before the pandemic is now worth $150,000 just within a couple of a few additional months. So that's what can happen with appreciation. And some economic events can trigger a higher appreciation than what you would see as normal or regular. So when you buy a property and you're holding onto it long term, think about appreciation and think about high appreciation areas as well. Okay. Then the other thing, big deal, is tax benefits. You know the saying that it's not how much you make, but how much you keep. It doesn't matter if you're a high income earner. If you're paying so much in taxes, then at some point it's not going to make sense anymore. And I'm just trying to play a trick here because my life. So, yesterday when I tried to do a live, it just didn't let me do a live, show my face and also show my slides. So I try to figure out a trick to make this happen where I can show my face and show my slides. So it's like I'm on Google Meet, but I'm also trying to show my slides from Google Meets to you guys on Facebook. So pardon all that interruption. And that's all I could come up with right now. Over time, I'll probably figure out something that works better for us because I want us to really benefit from this group and have a lot of information that would help us move forward in real estate investing and to do that successfully. Okay, so let me talking about taxes, talking about how you pay your tax because it's so important. It's not how much you make, but how much you keep. How much of that money or of that income are you keeping? Okay, so what a long-term investment does, excuse me, is to help you qualify for better tax benefits. So you're able to claim deductions on your real estate investing activities on a property. Okay, so you're able to claim additional deductions on your taxes. So if you're a high income earner and you're giving everything to Uncle Sam, then you really have to think about what you're doing, right? You have to think about what you're doing. I will make a quick illustration here on how you pay your taxes. Okay, so let's say you're an employee right now, you have a job and your job pays you $100,000 every single year. when you add up your pay stub, that's probably where you're at every single year, $100,000. And then you have to pay as soon as you get that money. Actually, as soon as that money is disbursed to your employer, your tax comes out automatically. Like, you don't even have a say about what's going on, what's going to happen with taxes at that point. Your pay stub shows you your tax has gone out, okay? And this is what is left, right? So your taxes go out right away without you having a say in the process. And whatever's left over is really what you are making, and it goes into your expenses. Sometimes you're able to have savings, sometimes you don't have any kind of savings whatsoever, but that is just the way it works when you're an employee. So you get your income, you make that money, it goes, taxes go away right away before it even gets into your account, and whatever is left over is what you have to spend on your own expenses. So sometimes you have what, $60,000 left over, because a few people have tax brackets that are close to 40%, right? A 40% tax bracket, that's huge, right? So you might have maybe 6K or more left to take care of your expenses. And then on the other side of things is a real estate entrepreneur. Okay, how does a real estate entrepreneur pay their taxes? So here we have a real estate entrepreneur that's earning $100,000 annually, right? So this is you, your real estate entrepreneur, you're earning $100,000 every year. So what happens here is this money comes to you first, you pay your expenses. Okay, so you have the opportunity to take a hold of that bulk money, pay your expenses, and whatever is left over is what you pay into taxes. So you can see there's a big difference between how an employee pays their taxes and how a real estate entrepreneur or a business owner pays their taxes. This is really something you want to think about. And this slide shows you that it doesn't matter how much you're earning right now. What matters the most is how much you're keeping. And I'm hoping that at some point in time and soon enough, someone can really re strategize and think about how they're making money. If you're an employee, how can you hold on to how much you're earning as much as possible? Okay, so just quickly, I want to talk about the topic again, why it is a good time to invest in real estate. So, real estate market is in cycles, okay? It's in cycles. It's not the same in a decade. So in a decade, things can change, right? In a couple of years, things can change. We need to understand where we are right now in the real estate market so we can make sound decisions. Okay, so a real estate market, just in a nutshell, is made up of two kinds of market. We have the sellers markets and we have the buyers markets. So you see where here in the sellers markets, we actually have a rise in prices. Okay, so we have a rise in prices, and that's something that the pandemic did. It did increase the prices of properties. Okay, so it was a seller's market because sellers could sell properties at high prices. Okay, so there was a rise in prices, and after a while, they actually had to intervene with this increase in interest rates to kind of just bring things down a little bit, right? So now we're forced into this buyer's market where, because of higher interest rates, buyers are not, they're not really looking that much anymore, because how much you would have been paying in mortgage is now higher because of higher interest rates. Okay, so that's what we're experiencing right now. We're in the buyer's market. Okay, so we have the seller's market where prices are high and the sellers are having a great time selling high, and after a while we go into that buyer's market where buyers are able to cherry pick between properties, choose whatever they like, go have a couple of options. During the pandemic, it was crazy. I mean, that's not what we expected from the pandemic, right? But real estate assets actually appreciated a lot, by a lot. And it was, the sellers were having a field day. They were, selling like crazy, and buyers weren't really having fun. I mean, before they sent put out an offer, somebody has already snatched that property off the market. And that's what we were experiencing before the interest rate intervention came along. So now we're kind of in the buyer's market. If you're not experiencing this yet in your markets, then it's different. It might be coming or something. But that's generally speaking where we're at with real estate investing. And as real estate investors, we react to the markets relatively. So we react to the markets depending on what's going on. How we react to the market depends on what's going on. What phase of the market are we at? Okay, so in the seller's market, I already explained what's going on there and what's going on in the buyer's market. How are we responding in a seller's market, and how we're responding in a buyer's market? So in the seller's market, we're doing activities related to selling. We're selling properties, we're doing fix and flips, and we're selling those properties. So during the pandemic, up till even last year, a lot of fix and flips were going on. We're selling really good until maybe like middle of last year, when with the rise in interest rates, buyers started to kind of back out and started to kind of look at, reconsider those properties, and now they can pick and choose, right? And so that's how we react in a seller's market. You're selling in a seller's market as a real estate investor. Remember, you're a real estate investor, you're both a buyer and a seller. Okay. And in the buyer's market, we are buying properties to hold. Remember what I said about the market we're in currently? Remember what I had explained about this market being the bias market. I was just trying to make sure that we're still live and everything is working good. So remember, I did say mention that we are in the buyer's markets. What we should be doing right now is buying properties, because now we can choose, because now we can make lower offers, we can go out there and find properties. Now we have motivated sellers who weren't probably able to sell during the pandemic. I mean, at this point where the interest rate situation happened, and now they have properties sitting on the market, they're dropping prices. Now we can actually make better offers, right? We can make lower offers, we can buy properties at very good pricing. Okay, that's not the only thing we can do in this market. Aside buying properties, we can still do fix and flip. The caveat with this is being conservative. So if you're doing fix and flip, you have to be conservative with your numbers. You have to go with after repair values that we had similar to before the pandemic. Okay, so you can do both activities, especially buying. So if there's a time to buy rental properties, it would be right now. It would be in this market. This is a great market to buy. Okay, and something I want to say about a rental market is this. Regardless of the face of the market, regardless of the times and the seasons, a rental market would always bloom, would always blossom. Okay, so during the pandemic, we had a lot of tenants who were looking for properties to rent. Okay, right now, there's still a lot of tenants who are looking for properties to rent. So if you have a property you're renting, your tenants are still in there. In fact, they're in there right now in this crazy market where the interest rates are high, and they're like, okay, let me continue to rent, right? And they're in there when in the seller's market as well, because their offers are being rejected. If they were trying to get a house, the offers are being rejected. The competition was so high. The sellers are having the field day. They're there. They're still renting. In the buyer's market as well, they rent. So this market would always blossom, right? So tell me again, why don't you have a rental property? If you have the tax benefits, if you have the appreciation benefits, if you have the cash flow benefits, why should we not have a rental property? Especially in this market where we can purchase rental properties at good pricing. So I want to say not just the short-term, long-term rentals are doing great right now. Even the long-term rentals are doing awesome. Uh, the short-term rentals are doing awesome. Short-term rentals are doing great. Long-term rentals are doing great. Just in case I said it weird, I don't know what I said before this, but both short-term rentals and long-term rentals are doing awesome right now, and I keep getting feedback for from long-term rental owners and also short-term rental. And I just wanted to also share what feedback I received over the last weekend. That was specifically on Sunday, and I said, share with the group because it's going to encourage someone who's still out there trying to look for a property or trying to figure out if they really want to even do this in this market or not. And that's one of our students' testimonial. A group member, she said, sharing a screenshot of a single booking for my recently launched property on Airbnb. Keep pushing, guys. So encouraging the group, making sure everyone is up on their feet and doing great. Which is something we always do, so it's an example right now, example in real time. This is just Sunday, right? This past Sunday, that the rental market is doing great. Look at her getting a booking of 31,000, and her net was actually at 27,000 at once. That booking at once. So tell me again, why are we not buying rental properties? That's her net at 27,000. That's her gross at 31,000. Booking at once. Why are we not buying rental properties? Why are we not making the best use of tax benefits? Why are we sweating out to Uncle Sam? Okay, so I know you might be thinking how to get started. Maybe some of you are investing in real estate already right now. That's a great thing. If you have any questions or need any help moving forward, definitely reach out because we want to make sure everyone is successful. But how to really get started is to get the knowledge. For instance, if you didn't know that the real estate market exists in cycles, how are you going to know the right time to invest? How are you going to know the right property to buy? How are you going to know the right location to buy your property? So you need to make sure, first of all, before doing anything, don't operate blindly. And my students know, they know if you're buying a property, the first thing I want to say is not the photos of the property, it's the numbers. I want to see your deal analyzer. I want to see your sheets. I want to see the real numbers, because if you're not going to be making any money, I don't think it's a great idea to buy any properties. So first of all, get the knowledge. Make sure your numbers are sound. Make sure you're buying the right kind of property, the right kind of deal that will give you the right kind of income you're looking for. And the next thing after acquiring the knowledge is to get deals done. And deals just means you're buying a property. Deals means you're doing something, a deal in real estate. You're making massive income in real estate. So you get your knowledge first of all, and you go ahead and get deals done. So reach out if you need any help, and please invite your friends to this group. Any friends, just think about a friend right now that you think might find this information valuable or this group helpful for them. Maybe they've talked to you about investing in real estate. Maybe they make too much money and they've invested in the wrong things or things that didn't quite work out, or maybe just really want to help someone out. Definitely invite them over here because we want to be able to reach as many people as possible. All right, my name is Yinka Morin again. Reach out and I will see you soon. Thank you so much for paying attention.